All right, hey, welcome to the Closing Beat. Happy Tuesday out there. How's everybody doing? You having a good day? Hope you're having a good day. What's going to be a great day is on Thursday. So if you don't know, we're financial advisors here at Jazz Wealth. Hope you check us out. But Thursday is our Wine and Wealth class, and this Thursday, I don't hype stuff unless it's legit, right? Unless it's for real. But this will be the coolest thing that any advisor has ever been able to offer to their clients. And that'll be on Thursday. So I'm going to go over it. We'll go over how it all works, what we're talking about there. And no, we're not talking about that silly, whole life insurance, borrow against your whatever, so you can have the infinite banking system. Now, we'll put that to rest. That is not what we're doing. I even covered that in our Notes from Jazz. You can check it out if you're one of our clients or one of our research members. Every week I do an email. You can see an archived list of all of the emails as you go back there, but we were talking about some things, some other things in there and everything like that. And then we talked about this week, the announcement there. And no, it is not talking about the horrible life insurance garbage that the wannabe wealthy promote. You can see it right there. A little rough, I get it, but Thursday, looking forward to that. We're likely going to do it over there so I can draw out some stuff to share with you. So I hope you are ready because I'm not playing around. Taken me 2 years to basically get approval and go through the process. Whenever you do something new, like regulators are like, I don't know what to do. So I put up a good fight, kicked and scratched and clawed and cried a little and, got what I wanted. So, hey, welcome, by the way. If you're not a client, then no big deal. I'm just teasing what we're going to talk about on Thursday. I've been teasing it for a while. Hey, got a nice rally here today, right? Look off over to the right-hand side of your page. You're seeing a nice rally on the screen. Do you trust it? You all in? Right? Is this the time? Do you buy it? And hey, we go higher from here. Well, we got a lot to think about there. We have the Fed coming up tomorrow, so that'll be all exciting. Of course, we'll be around for that. Yeah, you got a war going on. You got inflation going on. You have the average spending rate of a U.S. citizen going down, so more money's being held. But you have retail sales going down, overall growth going down as well. Stagflation, huh? We talking about that? Sales numbers are falling. We'll get retail sales, and we get that tomorrow actually. So we'll take a look at that. But the point is, do you trust this rally? I mean, is this the moment in time that you have to be all in? Is there some good news that takes you back beyond the downtrend here, and you get excited? We go back to all-time highs as if nothing ever happened? I don't think so. I think most of you are like, all right, this is nice. I'll take it, right? But I don't think I'm missing anything to the tune of like a 10% rally that's just going to blow us away here and you're going to miss it. Now, the S&P 500, you can see it on the screen there. We're only down about 10% year to date. So we're right there in that correction territory. We've jostled around between 10 and 12% for a while now, last week or so. And we finally got some of the big names to move today. That was the big catch today that caused the market to actually be able to do something interesting. You got Microsoft higher on the day, trying to recover as well. Again, is this the bottom? What do you think? Apple reversing course a little bit. We'll talk about that here in just a minute. Semiconductors, we talked about that yesterday. Where the semiconductors go, so goes the market. You got NVIDIA higher on the day. Micron got some positive reviews there from analysts talking about it being a buy with these lower prices here. So looking pretty good there. Facebook also trying to recover a little bit. It's flirted with the $200 area for about a week and a half now with no real luck. But today, a 3% gain. Can't complain about that. Your big names, Amazon. Let's get out of the way here. Amazon with a reversal today of about 4%. Tesla even saying, we got to raise our prices, but a stock's going to raise as well. So did good there. And if you look around the S&P, you could really look anywhere besides energy and, maybe just a few materials names. Other than that, you had some good stuff in there. I mean, retail stocks like Nike trying to get itself like not as extended anymore. Going over to some of the financials, Visa and MasterCard with a little bit of a rally. JP Morgan with a little bit of a rally. These are all oversold stocks now. Bank of America as well. You want to go into some of the healthcare stocks. You got Johnson & Johnson breaking out of a little bit of a range. Just naming names as I see them. United Healthcare trying to break out and not participating in really any of the market's declines there. Not bad. Cigna also with a good day. And some of the consumer staples areas actually did well today. We talked about that yesterday. Procter & Gamble got the bid today. You got Colgate got the bid today, right? Some of these oversold consumer staples. You could use the XLP if you want to take a look. That sector was the most oversold. We talked about that yesterday. If you had to look somewhere, That'd probably be the general area you want to look at. As far as industrials, you got UPS, ADP, all these things getting a little bit of bounces there. But again, having Microsoft and Apple and Google and Amazon and Tesla and all these names give you a little lift, that's going to help the stock market. So the fact that they weren't fighting against you like they have over the last couple of days was pretty good. Energy-wise, you got your pullbacks in some of the energy stocks. You got ExxonMobil falling a little bit, Chevron, a much-needed pullback here for us. It was a larger position for our office trades here, just having fun. A much-needed pullback of 5%. That was a big contributor to our recovery in the office trades portfolio. If you want, you can join us, by the way. It's $13 a month. And we do office trades, we do some research posts, do different things there. And you can join us there. We do a live show Monday, Wednesday, and Friday to just go over and actually show the trades that we're doing, good or bad. I'll just share them with you. But one of the good ones today that we were happy about rallying was Chevron. So looking pretty good there. Now, the S&P. Did you notice the old blue line going underneath the red line there? That's called a death cross. And the technical traders are going to look at that and be like, whew, that sounds scary, man. Death crosses, that must mean bad news. It's one of those, I talk about it every time it happens. So you ever have the golden cross, which is where the blue line goes above the red line, or the 50-day goes above the 200-day. And then technical traders like to look at the opposite of that, which they just call the death cross there. It's been almost exactly 2 years since you've had that happen there. March 20th, actually. So we're at March 15th. March 20th, 2020 was the last time we saw a cross here of the 50 and the 200-day moving average. Now, the death cross usually gets talked about a lot online and by the technical traders there. It sounds scary, but in practice, not so much, right? Since 1945, there's been a total of 39 of these death crosses, right? And over the next 1 week, 1 month, 3 months, 6 months, 1 year, they all have positive median returns. So it's not often something that you want to get excited about. Now, the range of the returns is wide, right? So you can have big drops and you can have big rallies, but the overall median return, as far as it being a strategy that you would employ, is not very successful if you were going to use it to bet on the markets falling there. But anyways, maybe that's part of the game there. So just want to point that out. If you see the people talk about the death cross there, ask for the stats on that. It doesn't back up what the name implies, which is scariness and more downside there. So just pointing it out there quickly for you. The NASDAQ actually has been able to bounce off the 20% down area. So it was in bear market territory. It hit the 20% down there and it's been able to bounce. So year to date, it is now down about 17% after today's 3% rally. It's the worst index year to date, but it was the best today. It had the biggest rally and it's also the steepest. So if you're looking for discounts, if you're looking for that mean reversion or maybe a sharp snapback with some positive news somewhere around the world, you'd probably want to bet on the NASDAQ. If you look at rates, rates continue to move higher. We can look at anything, any way you want to look at it here. You got the Fed tomorrow. It's a big deal, but rates continuing to move lower and kind of a quiet day, whether you're looking at the long-term rates or you're looking at the short-term rates. Quiet overall because who wants to take risk ahead of the Fed? Now, I made a comment yesterday that a rate hike is largely positive for stocks. And I think maybe that came across wrong or I said it maybe wrong there, but rate hikes are actually positive for stocks. Not immediately. So let's share you the data here because I don't want any confusion. All right, here is the market performance of the S&P 500 following the first rate hike of what would we presume be a cycle. What I did is I put down at the bottom the actual rate hikes that started, who the Fed president was, and what the rate actually was there so you could see. So if we go all the way back to 1994, this probably could have been better color-coded, but in the dark red, you have 1 month after the first rate hike in a series. In other words, that could be what we see tomorrow. We've been quiet for a while, and now we've got a rate hike. Over the 1 month, the stock market's performance after this rate hike was down. Over 1 month in 1997, down, a little bit worse. 1999, down, a little bit worse. 2004, down, a little bit worse. And in 2015, when Janet Yellen started her rate hike there, which brought us up to the 0.5%, down quite a bit. right? So in the short term, it is actually very difficult for stocks. Now, the day after is where it's usually positive, but I'm not showing the day after here. We're just looking out for the investors, looking at that there. So if you look to the next sort of light red area there, you've got the 3 months, right? Like I said, I probably could have picked a better color, but 3 months out, stock market lower on the first rate hike. Things change a little bit. 3 months out, got about 13% rally, but for the most part, if you look there, 3 months after a rate hike, not very good. And the longer you go, the better it gets, but not for very long. I don't know how to say it, but 6 months after the Greenspan hike, the first one there anyways, we were down. This was an outlier event, but not too bad. At least you got positive returns there, so it's not as horrible as 1 month and 3 month. So if you're planning on buying stocks because of the Fed rate hike, I don't know if that's something you want to do, then you might want to plan to hold for a little bit, right? Now, if you look at the Fed rates here, the actual Fed rate going up and down is basically what I'm showing here. This right here. Why did the stock market go higher on this one in 1997, right? What's the outlier event? What's going on? Well, if you go over here and you look, 1997, right there, February 4th is when we raised rates. That was it. They got one shot at it. They raised rates 1 tick or 1/4 of a point, had to keep it sideways for a while, then they had to come right back on down. That's likely why you see the stock market perform better, because we got the rate cut in between them. All the other examples, you do not have the same thing. The first rate hike continued a cycle, right? The first rate hike continued a cycle of raising rates. So it's largely presumed that our next one, which will say Powell, and it'll say 2022, that this first rate hike is going to start a cycle. And so anytime it seems to start a cycle of raising rates, it becomes harder for the longer term to perform better, and that's just simply because you go into a recession, right? You go into a recession shortly after, but that 6-month window is your optimum window if you're thinking that buying stock because of the Fed is actually a good thing. So just wanted to share that data with you. So I have an update of what's going on. All right, back over to the stock market here. You got crude oil pulling back. Thankfully, I'll take it, right? Let's get those gas prices down. They're still at $4.29 and $4.39 here, but we've had a $40 move in the price of oil. We had so much as a $10 move, and they raised the prices real quick. So what's going on? Just asking. Anyways, that's good. That helped the energy stocks pull back there. Again, like we talked about yesterday, the war and the demand out of China, because that's not getting any better over there, is largely seen as the reason for that. Let's point out one thing here. So let's take a look at Apple. So Apple broke the 200-day moving average. It's been 195 days since that happened. People like to look at this, right? It's a measure of general strength. It's not a magic indicator by any means. But people say, hey, if we're above the 200, Apple's strong, I want to be in. If we're below the 200, it's a sign for maybe some concern there. Again, not magic. 195 days of Apple being above the 200-day is the 8th longest streak if you go back to when they launched the first iPod. That was back in 2001. That's the area where people usually track, because that's where it really got exciting for them. So that's usually where we measure from. It's not really that long, though. 195 days is actually not that long. The longest was after 2008, coming out of the financial crisis, where we went 3 years. And then in 2011, we were just over 2 years. So 195 days is a little bit short, and looks as though today it's trying to recover a little bit. Let's take a look at the performance here of Apple following these streaks. Are you ready? Here's the average performance after we close below the 200-day moving average for the first time. Over the next week, you get a slight bounce. We kind of already started getting that bounce, right? Over the next month, 3%, next 3 months, 9%, and next 6 months, 20%. If you can hold for a year, a lot better there. So this is the sort of momentum of breaking below the 200-day. It's not negative, right? The average performance. You can have negative movements. Please don't let me mislead you into believing that it's just going to be positive by 10% over 3 months. I'm just saying your bias can't be to the downside, or you're likely going to be wrong. How wrong would you be? If we look at the percentage of times that it's actually positive over that time period, over the next week, it's positive almost 60% of the time, goes to 63, and then hits you into the 70s and 80s as you go further and out. So if you said, Dustin, this is not the time, we broke below the 200-day, things are going to get worse, I'm going to bet it goes down over the next 3 months. you've got a 29% chance of being right, almost a 28% chance of being right. If you're using the stats, right? This certainly could be one of those 28% of the times, but it just shows you probably don't want to fight that. You don't want to bet that the Apple breaking below the 200-day means it's going to be down over the course of a year from that point going forward. You got essentially a 19% chance of being correct. So just wanted to show you the stats on that one as well. Hope you enjoy the stats. It takes us a little bit to put them together. Anyways, what else do we have here? Oh, office trades. No adjustments today in the office trades. Everything happened the way we wanted to. So we said the other day, by adjusting our Las Vegas Sands position, we would be willing to take a smaller profit on a couple stocks there. So ACAM actually helped us out towards the end of the day there, and Royal Caribbean did. After hours, I guess it's down a couple pennies or something, but Royal Caribbean would be the other. So it's working out perfectly for us to have our portfolio delta right where we want it to be. So I'm excited by that, actually. We'll be back tomorrow, of course, with the office trades to make some adjustments, try some new things, see how things go. We'll see. New highs and lows. Where do we stand here? There were 12 new highs, mostly in the FinCare space, financials and healthcare. If you look at Travelers, that breakout has continued. Talked about that yesterday. A lot of excitement over a stock that was not participating with the market on the way down. So where do you think it goes when the stock market starts to participate on the way up? You guessed it. Bristol Myers, above those highs. This was sort of a last-minute one that I shared with you yesterday. That one broke to highs today. Not a lot of excitement there. But still, you got another 1% gain on the day. Not too bad. The extended stocks, all the extended stocks, wherever they may have been, got their rally today. So everything got picked on besides energy. So that's a good sign. EA Sports was one of the extended ones. We talked about that. Las Vegas Sands got a little bit of a rally. This, like we mentioned yesterday, it's one of our office trades we could use a little bit of help on. We showed you how to play defense in our office trade segment there and not take any more risk. So that was a cool one. Like to see that it's bouncing a little. And Take Two started off the day rather volatile, down to lows, and all of a sudden just snapped right back, erased all of its losses, and went positive for the day. So that was kind of a nice one there. The 8 lows, this would have been one of them there. They all finished positive on the day. So that gives you an idea of that early morning weakness was sucked up across the board, even at the weak stocks. So you like to see that one. What else do we got? Stocks in the news. Oh, I pressed the wrong button. There we go. That does happen sometimes. That's what I do. Tesla, about 5% higher on the day. They said we're going to have to raise prices. I don't think anybody didn't see that coming, but they're going to have to raise prices there. They think that demand will still be there, and it's not a problem. Everybody expects to pay higher prices, and there you go. You're going to have that probably coming across a lot of those names. American Airlines, a little bit of a recovery here today. Revenue guidance for this quarter said they raised it, right? It says it's going to be better than expected because the rising revenue sales for them will offset their rising costs because there's so much demand out there. And for that matter, United Airlines said the same thing. They're going to come in ahead of what everybody's expecting because there's a huge demand for people to get out there and fly for fun, leisure, vacation, things like that. There is that demand offsetting the higher price of fuel, which is creeping into their wallets a little bit, as well as all of us, as you can probably tell. Amazon's looking to close their MGM deal. They basically put it back on the FTC, or basically back on the government to say, we're going to go forward with this. You find a reason to stop us, and we'll talk. Very smart in their part, by the way. So that deal should close soon. And look, it's going to be... MGM is not don't think this is going to be like a profitable thing for them, and they're somehow just going to, make a lot more money. It's called a loss leader. So if you want to sound fancy in front of your friends, MGM just a loss leader for them, but makes perfect sense. Well, hopefully it makes perfect sense. They're hoping it makes perfect sense. Vail Resorts, MTN is the ticker symbol. You've been out there skiing a little bit? Not as much as they would have expected. Earnings came in a little bit weaker than expected. They kept guidance the same. Not a whole lot there. There's a couple analysts that lowered their price targets. You got Janney lowering from 335 to 300, JP Morgan from 314 to 279, Jefferies from 325 to 275, all because of earnings that came out today. Not amazing, right? That's pretty much it, actually, as far as the news for the day. Tomorrow, you just have Jabil Circuit reporting earnings there. They mostly beat on earnings, and they mostly have positive response to beating on earnings. Only once over the last 8 earnings quarters has the stock been down on that news. They're known for that. You've got Guest reporting. Lennar's going to report as well, and Williams-Sonoma. The big news tomorrow is, of course, the Fed. What's the Fed going to do? They've maybe a little bit behind the 8 ball now, huh? Are they going to raise rates to push us into a recession? It would be like them, just so you know. Now you know. You've seen the charts there. So it wouldn't be out of their norm, but we'll see what happens, of course. That'll be tomorrow afternoon, and we'll be taking a look at the response to that one there. That's pretty much it. Yeah, I think I nailed it there. Retail sales. Expecting to see that slow down a little bit, but we'll keep an eye on that as well. All right, let's see what questions you have. If you have any questions, and other than that, be on my way, do my thing. Get in on that oil. Yeah. Jin says, what's a better way to buy a house or stocks during these times? I think you're trying to say, would you buy a house or stocks? And that's weird that would be the decision you're trying to make. Do you need somewhere to live, or do you have money that you can speculate with? So I don't understand that. What are you going to do if you don't buy a house? What are you going to do if you do buy a house, right? That's it? You got the money to buy the house or invest in stocks? So that's a tough one to answer. Just, if you say, put a gun to my head, which one do you do? I mean, I have a bias towards the market, but I don't need a house. So that's not an easy one for me to give you a fair answer. Keep your DraftKings keeps going down. Yep, you're going to have to suffer. That's going to be like Amazon. And I'm not saying that it's going to turn into that big of a performer, but their approach is very similar to Amazon, which means lots of pain, lots of patience in order for that big reward in the future. That's not a trade for sure. It's a tough one to trade. Yep. K-Dog, what's the reason gas is going? I don't know. That's what I'm saying. What's going on? Why won't we just go out there and change the number? They were quick to raise that number on the signs, but they aren't quick to lower it. I don't know. Since Thursday's announcement is a new service, can you make it open to non-clients? Maybe. Maybe. I don't know for sure. You want to start in on Disney? They're killing it, man. Those parks. I don't know if I follow all that stuff. So those parks are a disaster to try to be there as a consumer. As a company, you're like, oh my gosh, people are just spending ungodly amounts of money. I would welcome a starter position there, as I think you mentioned. Yep. Which one has more? Well, you didn't ask the double yesterday. You said, well, which one has a better chance of being in it? I'll go with the same answer. It has to do with volatility. You'd expect more volatility in Tesla than you would in SoFi. So that's it. Yep. You like United Airlines there. It's a what do you call it? A chaos stock, right? So COVID, wars, international travel, other countries being shut down. You got to watch that sort of thing. Gas prices. You know how all that goes. So it's known as a chaos stock. I don't know that I'm looking to start a position right now. That'd be a tough one to suggest. Time to look for a house or wait a bit? Don't you kind of want to wait a little bit, right? So in every time we've ever done any kind of study or video or class, whether it's public or to clients or whatever, it is always proven to be better to buy a house for a little less money at a higher rate. And number one, people always assume that as to be a bad thing. So they're like, I'm going to pay more of a payment. No, that's if the interest rate goes linear with the price of the house is going down. That doesn't happen. It's nice to think about in practice, but or in theory, but it doesn't actually happen in practice. So be better off paying a higher interest rate for a lower priced house. I was trying to think of the one of the more recent videos we've done because I just couldn't think of it. Yeah. But that's a tough one. I mean, the other problem I have with it is, I mean, do you need a house right now? You're asking somebody to, what do I do? Are you going to rent something, or is your lease up and you got to pay an obscene amount more money and you should buy a house? There's a lot of things there. Yeah. How much money you trade with that office trades? I think we started with 100, and now we have like 140. Current balance is 141,071 for you. I was just trying to put enough to get the portfolio margin, but that's the current balance, and and you see it every day. We don't like hide the balance or hide the P&L and stuff. You just see exactly what's happening, good or bad. So it's never a guess. Yeah. Oh, are we doing this every day now? You're going to pick some food, Swiss cheese or American? White American, right? Or like on a sub or something like that? Yeah, white American. Otherwise, if we're just having cheese, I've been kind of on a pepper jack move lately. I don't know. Just kind of have pepper jack on the tongue. Hints on news for Thursday's Wine and Wealth? No hints. No hints. I guess one hint would be, there's the average person that doesn't care about their money. They're not here, right? That's not you. Then there's the person that wants to be wealthy, and they'll use those whole life insurance things, or they'll fall for any little thing to try to make themselves wealthy. Then there's the already exceedingly wealthy people. It's an advantage that only they get. That's what it is. That's your hint. Not the middle wealthy people, the stupid wealthy people. That's what we're going to be offering to the average person. Can't stay more than 5 years in a house. Don't do it. Yeah, what's that? Clark Howard's thing. That's his metric. Yeah, that ain't bad. Yeah, if you hit the like button, tomorrow will be green. There you go. There you go. Bought the house a little higher interest rate, got yourself a refi. It's one of the reasons why you pay a higher interest rate. Maybe you get lower rates, or lower price for the higher rate. Maybe you can refinance. Timothy, welcome. Made it live. Thoughts on the SPY hitting 440. So I like that would be the number, because that's just at the downtrend. You can't see. There you go. So that'd be just at your downtrend here, give or take $1, right? I mean, you're right there. So anything more than that, I think, is suspect, because if you're looking for that to be a target, you could use that as a target. Anything more than that, I think you need something. The tide's got to change for the general narrative of the economy and the world. And I mean, who feels good about what's happening right now? You need that to just change a little bit to break that downtrend. Yep. David Jones, any news on when you might accept new clients? It's a matter of weeks, not even that long, probably. Another announcement coming up too that has to do with that. Yeah, I hear you. Stupid wealth. Well, yeah, I don't know necessarily what that's like, but that's who I used to deal with, so I know the opportunities they get. And I always thought in the back of my head, how is that fair? Why do they get that? That's great that it helps them. Why can't you do it for a guy with this much money? But the only thing, it's a matter of flipping a switch. It has nothing else to do with any other regulation or anything. So my whole career here with Jazz Wealth has been focused on, what if they get it, can we not just put it over here? Like, who cares? Yeah. All right, I will wrap it up there and get out of your way. I appreciate you guys hanging out. Tomorrow, man, get your sleep. It's going to be a big day tomorrow with the Fed out there. Likely be a pretty exciting day for the stock market, so we'll cover it all. I'll be ready to roll, and appreciate you guys hanging out with me and watching. See you later.